Hello and welcome to our channel. Our specialty, tax experts, are honored to assist small businesses, nonprofits, and houses of worship with the Employee Retention Credit filing process. And here are the top 10 questions about the Employee Retention Credit. Question number 1. What's the difference between Employee Retention Credit, ERC, and Payroll Protection Program, PPP? The CARES Act, formerly known as the Coronavirus Aid, Relief, and Economic Security Act, was established on March 27, 2020, and launched two significant initiatives aimed at assisting businesses in retaining their employees. Payroll Protection Program, PPP, administered by the Small Business Administration. Employee Retention Credit, ERC, administered by the Internal Revenue Service. The Payroll Protection Program, PPPP, overseen by the Small Business Administration, provided funds equivalent to 2.5 months of payroll. To qualify for loan forgiveness, businesses had to spend at least 80% of these funds on payroll. Moreover, the PPP funds were not considered taxable income, and expenses paid with PPP funds were deductible. The Employee Retention Credit, ERC, managed by the Internal Revenue Service, offered tax credits or refunds based on a portion of payroll for each qualifying quarter. The eligibility for this credit varies each quarter, and there are caps on the amount claimable per employee. Question number 2. Can I also get ERC if got a forgivable PPP loan? Yes, you are indeed eligible to claim ERC even if you received PPP funds. Initially, under the CARES Act, employers had to choose between applying for PPP or claiming ERC credits, but they couldn't do both. At that time, PPP was more advantageous for most businesses, leading many companies with fewer than 500 employees to opt for forgivable PPP loans. On March 11, 2021, the American Rescue Plan Act of 2021 was enacted, bringing numerous changes and enhancements to existing components of prior stimulus packages. Following this, businesses that had already applied for and received PPP funds were now permitted to also claim ERC credits. Question number 3. How do I apply for ERC? Unlike the Payroll Protection Program, handled by the SBA, which requires a formal application, claiming employee retention credits is more straightforward. You don't need to go through an application process. Instead, you just let the IRS know you're eligible for the credit, much like you would for any other tax credit. This is done by filling out Form 941, which is used for employer quarterly tax filings. Question number 4. I thought payroll taxes deferred in 2020 had to be repaid. Does ERC operate in the same way? No. It sounds like you're referencing a CARES Act provision that permitted employers to postpone the deposit and payment of their portion of Social Security taxes. These deferred amounts were scheduled for repayment, with a minimum of 50% due by December 31st, 2021, and the rest by December 31st, 2022. However, it's important to note that ERC credits are different. They are not deferrals, but direct dollar-for-dollar credits against the wages you've paid out, not the taxes. These funds from ERC credits are not subject to repayment, provided that you have sufficient documentation in the event of an audit. Question number 5. What if our business is not essential? Your business doesn't need to be classified as essential to be eligible for the Employee Retention Credit. If you're running a small business of any kind, it's definitely worthwhile to consider applying with us. Question number 6. What if we never had to shut down our business? Qualifying for the Employee Retention Credit, ERC, depends on various criteria, and revenue is just one of them. Businesses that haven't experienced a significant decrease in revenue, or even those with increased revenue, may still be eligible for the Employee Retention Credit. Question number 7. Am I eligible if our revenue in 2021 was back to pre-pandemic levels? Even if it seems like your revenue has stabilized, there are several factors to consider before deciding against an ERC assessment. Firstly, you might still be eligible for the credit in 2020 even if your revenues appeared normal in 2021. You can claim these credits retroactively. The eligibility in 2020 was based on a comparison of revenue declines from 2019, or if your business faced partial or complete shutdowns due to government mandates. Secondly, for 2021, it's important to note that a comparison is made against your 2019 revenues, not 2020. So, a return to normal in 2021 might still qualify you. Finally, if your revenue in the fourth quarter of 2020 was down by just 20% compared to the fourth quarter of 2019, this could also make you eligible for the credit. Question number 8. Is this only for small businesses, or can charities, churches, or mosques apply? Yes, small businesses, nonprofits, and houses of worship can apply, just must have W-2 employees. Up to 500 W-2 full-time and unlimited W-2 part-time. Question number 9. Won't my CPA or bookkeeper handle my ERC claim? The Employee Retention Credit, ERC program, can be quite complex to navigate. If your team is comfortable with figuring out if you qualify for each quarter and year, calculating your credits, and getting all the paperwork ready in case of an IRS audit, then it's great to have them handle it. However, if you're looking for a second opinion to make sure everything's on track, we're here and happy to help. Question number 10. Is it too late to apply for the ERC? There's still time, but the clock is ticking. Currently, small businesses and nonprofits, including houses of worship, can file until April 15th, 2024, for quarters 2, 3, and 4 of 2020, and until April 15th, 2025, for quarters 1, 2, and 3 of 2021. You're just a click away from finding out if your business may qualify. Use the ERC calculator, scan to visit our website, click on Begin Qualifying to get started, and subscribe.